Okay, so after marking out my cycle, then I'll need to measure the patterns that form until my area of concentration. Remember, I already marked my 4 hours at my of my area of concentration, which is around 73,000. So I will need to use a parallel channel for my uh the cycle I marked, the latest swing. So this is the latest swing on this cycle, which is moving from here to here. So this is the latest swing that I'm marking out. So right now, I'll start by using my parallel channel from this area, then connecting this next swing. That's how you use your parallel channel. When you place it on top of this last swing, you connect the next available swing. Then you take it to this swing, this area. So this is my 1 minute chart. So you make sure that you place this at the tip of this chart. So this is my 1 minute chart. So on my 1 minute, I can get a touch at this zone, and a touch at this zone, and a touch at this zone, and a breakout here. So from this point of breakout, I would start counting several chart patterns that form. That is how it works. So the essence of using the parallel channel is to allow you know the time frame you are going to use, the lower time frame you are going to be monitoring. So when the lower time frame has a breakout like this, there is a breakout here at this zone. When you look, there is a breakout at this zone, and immediately after the breakout, that is this red candle crossing this line. Immediately after the breakout, there is a follow-up, which is a bullish candlestick. So using this signifies that this is like a downtrend moving down. So when there is a breakout of a downtrend and the immediate follow-up is a green candle, that means the time frame it's good for you to monitor this particular chart. So I can go on other time frames. I can switch my time frames again. So you can use as many time frame as you want, but whichever time frame you're using, you should make sure that there is a breakout and there is an immediate follow-up of a bullish candlestick. That is to say, it must be when it's in a downtrend. If it's in an uptrend, it's going to be opposite. So this is a 2 minute chart, and I still have a breakout here, and the immediate candlestick again is a bullish candle. So I have the 1 minute chart is where I marked here. So in the 2 minutes, there is also this. So when this happens, you know that there is a possible reversal on that particular time frame. So I'm going to still check as many time frame as possible so that you get the clarity. So it's not much you are using only one particular time frame. Now I'm using as many time frame as far as it gave me the breakout and immediate green candlestick. So this is a 3 minutes chart. So the 3 minutes gave me a breakout also, an immediate bullish candlestick. So 1 minute, 2 minutes, 3 minutes is good. Then let me switch over to 5 minutes. When I switch over to my 5 minutes, so when I switched over to my 5 minutes, you can see that we had a breakout at this zone. But after the breakout, the immediate candlestick is still a bearish candlestick. So 5 minutes is not a good time frame to monitor this chart on the lower time frame. Remember, it's because of the zone. It might be another zone and 5 minutes might be good, but because of the zone I'm into now, I have good 1 minute, 2 minutes, and 3 minutes time frame. So I'm going to check the next available time frame, which is 10 minutes. So when I got to my 10 minutes, this swing I'm going to use here vanished. I no longer have a swing at this zone. When you look at this zone, I no longer have a swing. It just looks like a straight downward movement. So I cannot use 10 minutes for this time frame. 5 minutes, there was a breakout, but the immediate follow-up wasn't a bullish candlestick. So 5 minutes was cancelled. 10 minutes, we don't have any swing. So I'm not going to use 10 minutes. So I'm having only 1 minute, 2 minutes, and 3 minutes chart. Maybe if you use another swing, you can use another time frame that have a bigger maybe it will have a bigger swings so that we can use different time frame. But the particular cycle swing I use, it made my swing small. So that is what I'm working with. So I'm using only 1 minute, 2 minutes, or 3 minutes. So these are my valid areas to use. So remember, when you're drawing your swing, when you're using your parallel channel, the first swing you are going to connect must not exceed this line. So I'm not using this parallel channel like this. Mind you, I'm not using it like this. I was using it the first two swing before we crossed this downward boundary, because this is the boundary I'm working with. I'm working with this boundary as my cycle boundary. So the first two swing you are going to connect should not cross this boundary. When it crosses this boundary, it's no longer valid as well. So those are the things you note. So let's go back. So in this strategy, you should pay very much careful to learn it, because it's not something you would see on everyone's random video. So this is a self-developed strategy, and I've backtested for a couple of times and it's working perfectly. So I can actually use 3 minutes, since it gave me a good breakout. I can use 3 minutes. So after determining the time frame you're going to use to monitor your lower time frame, what is next you're going to do? Now, the next thing you're going to do is for you to observe the recent liquidities, or you call it, okay, you observe the previous liquidities, or you call it the previous support. When I mean liquidities, I mean all this zone, 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 all this zone. These areas, there are a couple of liquidities there. What am I going to be looking at? I've already gotten my breakout. So what is the next I'm looking at? I'm looking at an area that your market had a clean bounce. If I'm looking at this area right now, this is a liquidity. So I'm looking at the area my market had a bounce, and the bounce should be without breaking this region. So if I have, look at these two, so the areas I have here, look at this first area. So the difference between this, okay, we're not looking at this, but I'm using this liquidity as in this liquidity, I had a breakout here. So this is not valid. So when your liquidity is stacked like this without breaking it out and formed a bullish candlestick, this bullish candlestick should be either bullish engulfing, morning star, or some more, like you can check a couple of bullish candlestick. It must be one of them. So, but when it's not a bullish candlestick, then you can count it off. So I have another liquidity down here. So the candlestick that bounced on it again. So I checked this first zone. I checked the first zone. I didn't get any bullish candlestick. I checked this second zone. This is not a good bullish candlestick. I start going down again. So I look at this other bounce, or you can just you can use single line for my next area of liquidity. So check my next area of liquidity. Did I have a bounce? Did I have a bounce? This is my next area of liquidity. Let me use my zone instead of a single line. I use a single line for just a faster marking. So now this is where I got the bounce. This is where I got my bounce. I have a bullish candlestick at my area of liquidity. So when you don't get this is bullish engulfing, you can verify from a couple of candlestick books. So when you don't have, look at these areas, they didn't give me a bullish candlestick. So I'm not using them. So I found my bullish candlestick. So what is next that I'm going to do at this moment? Because it's not done yet. The strategy, we've already like gotten to a quarter of what you're going to do. Where the work lies now is after finding this bullish candlestick, what next are you going to do? Next thing you're going to do is to start looking for chart patterns. I'll show you how this chart pattern works, how you start looking for your chart pattern. So from this first area of liquidity, you draw this to this. You draw this, you try to connect this with this. So we are no longer looking at this zone. We are done with this. We are looking at this area. So you draw this, you connect this previous swing to this. So when you just get two touches, it means that what is forming here is double bottom. So we're having likely double bottom at this zone. So once the price goes below this first double bottom, another chart pattern starts forming. So I have this other zone. Look at this. Remember, I always mark my liquidity, my swing with immediate retracement. I don't mark my swing with a big retracement. I mark my swing with red and green candlestick. So I have my red and green candlestick. So I have a mark from here to here. So I mean I have another likely double bottom pattern forming at this zone. And it was not complete. Remember, I have a big zone that I'm looking at. The zone I'm looking at is quite at I have the area I'm looking at to be, I think, 73,000. So right now I think the last zone we got to is 73.7, but I'm looking at this clear of liquidity on 4 hours. You can zoom out on 4 hours to see the area I'm looking at. So I'm looking at 4 hours for us to have a sweep of liquidity at this zone, and also have a fair value gap also stuck at this zone. So I'm using my cycle to determine my entry on these zones. So that is what I'm doing with my 3 minutes charts. So right now, so remember we are here. We are still trying to mark our chart pattern. So the next area of chart pattern is here. So when you watch this from here, the next swing movement is here. I mark this zone. I can mark this like this. So this intercept like this, so I can just draw it straight. Remember this, I draw this like this because there was no, it didn't touch any other candlestick. That's why I concluded that this is a double bottom. But on this touched some candlestick. This my drawing touched some candlestick. So I can consider here as a wedge pattern. So when lower time frame is moving down, they move down with different chart pattern. So they move down with different chart pattern. So I'm trying to pick out the chart patterns one by one. That is why I'm breaking it down. That is how you find your different chart pattern that the time frame is using to move. Because those chart pattern will tell you if that zone you're looking at will be good, and it will also guide you for your stop loss and your entry as well. So since this is a wedge pattern, since I drew this, make sure you connect it well. So since this is a wedge pattern and there is a breakout here, once there is a breakout on wedge pattern, remember the zone we are looking at, we are not there yet. Once there is a breakout on a wedge pattern, it means that that wedge pattern is complete. So if another swing starts forming, you know that another chart pattern is forming. So I will use this my line. Remember, I'm not marking this because this is not valid chart pattern. I'm using only wedge and double bottom. And when I mean wedge, my wedge is always looking for lower lows, and double bottom is always lower lows as well. So this is the next area I'm marking. So okay, you be careful when marking out this pattern. So I have a bigger chart pattern here compared to what I have here and here, but it's still valid. So this is another wedge again. So after this wedge, there is another wedge. So on this wedge, where was the breakout? I had my breakout here, and the area I'm looking at, we are not there yet. So I had my breakout here. So after that, the next low, I'm picking out the next low. Try to like mark from here to here. Then the next low, I can pick it out. So I'm picking out my next low, which is here. You see the next low. So when I try to join this swing, you see the next available area is very far from me. So the next available swing, which didn't cover this swing, so I cannot join this unless this goes like this, but it's not valid. So you try to join the next two available swing. If this one crosses there, then it's fine. But since we have a swing here that made a swing low, we cannot just join this all the way down to this side. So I assume there is a double bottom that formed at this zone. That be the case. On this zone, I have another swing. If you look, it's tiny. I have another retracement there, so I have to join it. So I'm joining it. See that we have a very small wedge that formed at that zone. So after this, let me zoom out. Okay, so the wedge broke out at this zone. So the next available swing that I'll be looking at is this two zone. So you see, so you see that this, I'm still omitting this lower low swing, so I won't draw so far like that. I will just conclude that I have a double bottom forming here. So I go on. The next available swing is this two. Then the last swing that we have now is this two. So there is a double bottom here as well. There is a double bottom that formed at this zone, and also another double bottom that formed at this zone before the next movement. So right now, the area I'm looking at for on 4 hours, we have not gotten there yet. We've not gotten to this area yet. So, but we saw the price moving up. So this can be a fake movement. It can be a fake movement. So you don't be tricked out, because unless there is a higher time frame zone that you're looking at at that particular area. But if there is no higher time frame zone that you're looking at on that particular area, there is no need for you to be stocked at that particular zone. So when the price gets to this zone that I'm looking at, then I'll make another video to show the confirmation how it looks like. So this is a step by step. You study this, then my next video will be on how to confirm my entry when it gets to my higher time frame region. I think that's for now.